We are grand morning, grand morning. All right, and we are live. Grand morning, grand morning, grand morning, man. It's your guy, Mr. Chauncey Reed, y'all. Hey, and just like always, man, as y'all hop on, go ahead, drop your city, your state, where you're actually hopping on from. So hopefully we can add some value to what you have going on in your life. All right, man. Here we go. Man, as you see what I labeled this morning, ladies and gentlemen, a tax numbers that all employees need to know for this year. Okay. What all of them need to know right now for this year. And it's so important, ladies and gentlemen, because a lot of people are about to be impacted. Hold on, let me get it up here. A lot of us are going to be impacted come this year. So we got to put ourselves in position for the next year. Okay. What I'm about to do real quick is I'm going to pull some slides up, man. So, you know, hey, I can hopefully make it hit home a little harder. All right. Let me get this together real quick. All righty. Okay. Of course, it's coming. It's coming. All right. All right, here we go. Should be coming up. Oh, of course, it will want to take longer than it's taking longer. But while it's coming up, let me go ahead and put this out real quick. Okay. Because what we're going to be talking about this morning is things that at the start of the year, a couple of key numbers that we got to make sure that we understand. Okay. What? All right. So it's a couple of key numbers that we really got to understand. And we got to put ourselves in position to do this every year. Okay. Here we go. Should be able to share my screen. All right. Let me make sure it is sharing. But of course, this morning, all right, all kind of stuff want to go wrong this morning, but it's not going to stop us this morning. So, ladies and gentlemen, I promise you it's not. Okay, yeah, let's close that real quick. All right, here we go. Tax numbers that, close that again. All right. Hey, this morning, what we're going to be talking about is a couple of different tax numbers that everybody got to understand when, close that. All right. Tax numbers that everybody got to understand for the 2021. Okay. Now, we got to understand the fact that with these numbers here that we're going to be talking about this morning, it's going to be pivotal when you get ready to file for the 2022 in 2022, okay, for the 2021 season. Now, we got to understand that when it comes to this, hold on, can you see it? All right. Oh, hold on. All right, here we go. Now you should be able to see my screen, ladies and gentlemen. Yep. Okay. Here we go. Tax numbers for employees that they need to know for the 2021. Okay. Many of these things right here, like I say, when it comes to the adjustments that are important for actual employees, when we talk about things like their paychecks, basic tax planning for the year. Okay, this year here, the IRS and of course the Social Security Administration, they put figures together the fall of each year. When they put those together, hey, come January is really when you actually need to make sure that you're paying attention to what things they have put out. What you'll find yourself doing is that there are many tax codes, many of the tax code sections, they get adjusted. And it actually can be kind of hard to spot those that actually gonna matter to you. Okay. So this morning, I'm just gonna talk to you real quick about just three different ones, three different sets of tax figures that all employees gotta know. All right. And what they're gonna relate to is compensation from work, paycheck withholding, and the potential need for estimated taxes and your retirement savings. So the first thing we're going to jump into, and I don't know why I want to act crazy this morning, but it's okay. Boom. Now, the first thing we're going to jump into is let's talk about Social Security wage base. When we talk about this, two things that I really want to make sure that you understand and you know. Social Security tax, of course, right now with the tax deferral, we know that that's 6.2%. And that applies to wages up to the maximum amount per year set annually by the Social Security Administration. See, any income above that threshold, above the threshold is not subject to Social Security taxes. Things like Medicare, that's uncapped with the rate. It either is between 1.45% and or 2.35%. And it's all dependent on what's your income level. All right. Now, this year, the Social Security wage cap is at $142,800. Now, that's up slightly from the $137,700 in 2020. See, this means that the maximum possible Social Security withholding for the 2020 year, the 2021 year, is $8,853.60. Okay, so once your income is over that amount, you're going to see that 6.2% back into your paycheck. See, now you start winning. And I know a lot of us can actually relate, especially when it comes to the tax deferral. Okay, so let me move it to the next one. Yeah, we're going to zoom it in a little. Okay. So you can see that there. All right. Now, right here, let's talk about the income tax bracket and the withholding. See, this table, it actually can help you kind of get an understanding of how an additional amount of compensation would actually be taxed at your marginal rate. See, excuse me, the numbers here, they're going to tell you whether or not the tax is withheld according to the information that you put on your form W-4, if it'll actually cover the total amount of taxes that you owe for the 2021 year. So now, to avoid being penalized and anything like that, you want to make sure that you know your effective or your average tax rate. Now, when we look at this right here, we notice that when it comes to your tax rate, of course, in that first column, okay, it's the percentage which that income gets taxed. In the second column here, we have the taxable income for a single person. Okay, whoever files single, this is your tax rate what you're falling into, the taxable income that you have. And in the third column, what we have here is the taxable income for joint. Anybody filing joint, this is their taxable income. So some things that you want to make sure that you understand is this. Okay, additional compensated, any additional compensation received, things like cash bonus or income from non-qualified stock options, they exercise or they vesting of restricted stock units. See, all of this is considered supplemental wage income. So for your federal income tax withholding, most companies, they don't, some of them don't even want to use the W-4 rate. Instead, they'll actually apply the IRS rate of the 22% for supplemental income. Now, as you see on the table here, as you see on this table, once you know what your marginal tax bracket rate is, you may actually find out that the withholding of the 22% may not actually cover all of your taxes for that year that you will owe on your supplemental income. So if that's the case, what I guess if that's the case, you must either put some extra money aside, and I've done a video about where you can actually do extra money, where you can put extra money aside for the 2021 tax return that you're going to file in 2022. Okay, so or you can actually adjust your W-4 based on your salary withholding as soon as possible, ladies and gentlemen. So these are some things that you're going to want to do to make sure that you're in position for the 2021 tax season. And the best time you have to plan for these things time now, ladies and gentlemen. You cannot wait until 2022 when it's time to file your 2021 tax season, your taxes, and then say, okay, oh, I should have implemented that. The woulda, the shoulda, the coulda is the things that will put you in positions where you will find yourself in trouble. So today we talking about things you can do to take action on right now. Now, let's talk about this. Okay. Your contribution limits. Okay. In 2021, you can elect to defer up to $19,500 from your actual paychecks. All right. And all of that can go into a qualified retirement plan, such as your 401k. Okay. See, the ceiling for the deferrals, they kind of define the contribution in any kind of defined contribution retirement plans. They include things like extra part contributed by the employer. That's all included in there. And it actually rolls up to $58,000 for 2021. So that's $1,000 increase from what it was last year. So, but see, both of these limits, the thing with that you got to understand is, hey, that's $6,500 higher if you will find yourself, if you're 50 years old or 50 or older. Okay. So what you want to make sure that you do here, ladies and gentlemen, is you want to make sure you look into whether or not your company has those non-qualified deferred compensation plans. Sometimes they might even call them and they might call it a excess 401k plan, or they might even have some other type of names for it. So like I say, this morning, ladies and gentlemen, man, I just wanted to hop on here real quick and just reach out to you because, you know, hey, it's getting ready to be officially tax season, right? So you want to make sure that you are educated. So, man, it's your guy, man, Mr. Chauncey Reed. I want to go ahead. Let me stop this sharing real quick. Boom. All right. Yeah, man. Hey, just like always, man, I just want to hop on real quick and hopefully add some value to what you have going on in your life, ladies and gentlemen. So again, man, if you catching this on the replay, hashtag replay. Okay. Drop it in the comments and drop your city and your state where you're actually hopping on from. So, man, hey, y'all have a great day, man, and a blessed week, fam. Peace.